This is the only guide to the differences between buying and mining Bitcoin you'll ever need. No, really. Here's the thing. Most people never deeply consider the trade-offs, but choosing the right path can make a massive difference to your stack over the long term. Bobby Fischer, the legendary chess grandmaster, once said, "Tactics flow from superior position, and when it comes to stacking Bitcoin, the same principle applies. The strategy you choose today, whether buying or mining, sets your position in the game, and over time, that position compounds. Better cost basis, better tax treatment, more sats, more sovereignty, even a small edge sustained over years can lead to a dramatically larger stack." In this video, we're going to break down the real-world pros and cons of both approaches. You'll see how market conditions, taxes, and even hardware value all impact your outcome. By the end, you'll know exactly which strategy fits your time horizon and goals. Whether you're a curious newcomer or a seasoned maximalist, this video's for you. Oh, and be sure to stick around till the end for a final tip that not nearly enough miners are talking about. Let's start with buying. It's clean, simple, instant. You log into an exchange, hit buy, and you're done. There's no setup, no hardware, no technical knowledge required. You own Bitcoin, and it's liquid the second you need it. But here's the limitation. If you spend $10,000, you get $10,000 worth of Bitcoin. No more, no less. Your stack doesn't grow unless you keep feeding it. Now let's talk mining. Mining is different. When you buy a miner, you're buying a machine that turns electricity into Bitcoin every day. And here's where it gets interesting. If Bitcoin's price rises faster than mining difficulty, miners make more BTC, and they make it faster. Let's walk through a simple example. Say you run a miner that costs $7 a day in electricity and earns $15 a day in Bitcoin. A DCA strategy using that same $7 a day only gets you $7 of BTC. Now imagine Bitcoin's price doubles overnight. The DCA still buys $7 of Bitcoin, but your miner now earns $30 per day. Your electricity cost is fixed, but your output doubles. That's a 4x advantage over buying. And because difficulty adjusts slowly, there's a delay before other miners catch up. This time lag creates a golden window of outsized mining profitability. But mining's benefits don't stop there. Depreciation. You can write off the cost of your ASICs, meaning mining can reduce your tax bill. If you're looking for incentives to mine, this is a big one. Upside to transaction fees. Spot buyers pay transaction fees. Miners earn them. During bull runs, fees can spike to 15–90% of miner revenue. Mining gives you exposure to that upside. Buying exposes you to the cost. Hardware is an asset. ASICs aren't sunk costs. They're resellable assets. In fact, hardware often appreciates in bull markets. In 2021, prices rose over 500% because supply couldn't keep up with demand. If you mine at the bottom, your gear could double or triple in value. And here's something most people overlook. Hash rate growth is slowing. The marginal efficiency of new machines is shrinking. This makes mining equipment more fungible, more likely to retain value. It also means the supply side of the network is hard to scale quickly. If Bitcoin's price rips, hash rate won't be able to keep up right away. That gives miners a massive profitability window. Buying Bitcoin gives you certainty and simplicity. It's a one-time investment, you pay up front and you're done. But mining gives you leverage. It combines upfront cost with ongoing electricity spend. But in return, you get daily Bitcoin yield, tax write-offs, and the potential for your hardware to appreciate. That makes it a more complex strategy, but one with layered upside if you play it right. If you believe in Bitcoin over the long term and you want to stack more sats with tax advantages and deeper exposure, mining can deliver more bang for your buck. Want to see which strategy fits you best? Try our free mining profitability calculator. It takes 30 seconds and shows you the numbers that matter. Stacking sats is the mission. Whether you mine or buy, just make sure you're playing the long game.
For more information, visit simplemining.io.